Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to the Jinyi Good Night Watch for Thursday, October 30th. I'm analyst Jian Jinda. Please like, subscribe, and share. If you have investment questions, leave a comment. If I can't answer today, I'll address it in tomorrow's class. Today saw the Fed's interest rate decision at 2 a.m. and several earnings reports released. Tonight, there's news from the Bank of Japan, and later, the European Central Bank will announce its interest rate decision. There's a lot of information, and today I'll break it down and share it with you. First, let's look at today's investment highlights. The first is there still a chance for another rate cut in December? As we know, at 2 a.m. today, the Fed announced its interest rate decision, and as the market expected, they cut rates by 1/4 point. After the rate cut, what exactly did Powell say in his remarks? Did he mention the possibility of another rate cut in December? We'll be following up on that for you in a bit. In addition, there's the Trump-Xi meeting. One of the key topics today is the meeting between Trump and Xi Jinping at noon. The Trump-Xi meeting actually lasted only 100 minutes. But what were the highlights of this crucial 100-minute conversation? What did they discuss regarding the trade war, tariffs, and future trade negotiations and cooperation? Are there any notable points? Is there a possibility of a second meeting between Trump and Xi in the future? And how will this affect the tariffs related to the trade war on November 10th? Will the tariffs actually be implemented, or will there be further deliberation? What were the key points and special concerns raised at this Trump-Xi meeting? On another note, regarding the business scene, the 3 major tech giants released their earnings reports yesterday. What were the main highlights of these reports? As always, some companies are celebrating while others are worried. The earnings reports released yesterday included Meta, Google, and Microsoft. Overall, their revenues exceeded expectations and their performances were quite good, but there were some issues in certain subcategories or important areas like AI development. There are some discrepancies in EPS and other metrics. Soon, I'll discuss which companies to watch and which may just have short-term volatility. Lastly, let's mention Boeing, the so-called monster. Their earnings report came out, showing both good and bad news. Most importantly, watch the neckline in the technical analysis. This neckline has been difficult to break through recently. So, with today's Boeing earnings report and the ongoing negative impact, whether or not it can reclaim this neckline is extremely important. So today, I'll be discussing with everyone a lot of topics, including monetary policy, earnings reports, and issues related to the Trump-Xi meeting. Hope everyone is fun. Hello, everyone. Good evening on May 1st, 28th, and hello to Minim. Good evening to Mining My Daisy as well. And also hi to Zai Fei to you. Zai Fei to you said, because recently the account has been showing up every day, so you've been attending class. Okay, good, very good. And also K-Code Normal, I think I know who that is. Good evening. Not sure what you think about Meta's bottom, but later we'll talk a bit about Meta's earnings and its current technical position. Good evening to Alice Fu as well. Good evening, everyone. First, let's take a look at the economic data. At 2 a.m. today, the Fed cut interest rates by 0.25%, lowering them to 3.75 to 4%. I'll track this for everyone later and review the interest rate decision, especially the key points they emphasized in their statement. And as for Powell's remarks, do they suggest there's a chance for another rate cut at the mid-December FOMC meeting? Everyone should have a basic understanding that rate cuts themselves are generally positive for the stock market and the economy. They inject liquidity into the market, stimulate the economy, and lower investment costs. So, the act of cutting rates is typically seen as a positive move for the stock market. However, just because rates are being cut doesn't mean more cuts are always better. Not at all. Sometimes, you need to see if the economy is stable. If the economy isn't heading for a recession and rate cuts happen in normal times, then it's good for both the stock market and the economy. If the economy is in recession, declining, and central banks need to cut rates to support the market, the perspective changes. That scenario is different. For now, things are fine. The US economy and those of other countries have not entered a major recession. We can only say the Goa market is cooling, and inflation has risen somewhat due to the tariff war. Still, the overall economy, GDP and GOS, remains robust. So, it's just trending toward cooling, not a recession. Under these circumstances, implementing interest rate cuts is still favorable for the economy and stock market. That's the part about the Fed's interest rate decisions. As for tonight, since the US government is shut down, these economic data releases likely won't be published. Let's quickly look at the initial annualized growth rate for US third quarter GDP. The previous value was 3.8%, and the forecast is 3%. As for the personal consumption expenditure part, the previous figure was 2.5%, and the forecast is 3.2%. Finally, looking at the initial estimate for the third quarter core PCE, the previous value was just 2.6. The forecast is at 2.9%, a slight increase of 0.3 percentage points. The timing for these three data releases is still uncertain, as it's possible they won't be announced tonight. If they are released, just pay attention to the difference between the forecast and the actual values. That should be enough. Overall, I think inflation is currently rising slightly, but it's not out of control yet. As long as things don't get out of hand, the Federal Reserve will continue to maintain its dovish and accommodative stance and direction on monetary policy, and that hasn't changed at all. At 9:15 tonight, watch the European Central Bank's interest rate decision. Both previous and forecast values are 2%, so rates are expected to stay the same. Looking at it now, including the European Central Bank. This morning at 11 o'clock, the Bank of Japan also kept its interest rate unchanged, so the Bank of Japan this morning maintained it at 0.5%. It looks like the European Central Bank will probably also keep its rate at 2%. Is there a chance they might continue to cut rates in the future? It's still possible, because at this stage, if we look at the European Central Bank's inflation data, the monthly and yearly CPI rates are both at 2%. The annual rate has stayed at 2%, which is basically right at their target. So, as for the future of the European Central Bank, even if they don't cut rates again for the rest of this year, there's still a chance they could do so next year. That's a quick update on the ECB for everyone. Just keep an eye on the ECB's policy decision tonight at 9:15, and that should be enough. Alright, something about Yao Beast. Never mind. Okay, I'll reply to your comments. Now, let's take a look at the interest rate decision part, which is of course very important. If you couldn't catch it at 2 a.m. today, and maybe you didn't have time this morning because everyone was busy with work, that's totally fine. Just remember this. In the morning, check out our Kuning Morning Call show with Mr. Fan. He'll have all the relevant information prepared for you right after midnight. And if you really can't make it in the morning, then remember to tune in to our Kun Good Night show every evening. We have different teachers taking turns to host it each night. The rotating hosts discuss key happenings before the U.S. stock market opens. They track important morning events up to the opening and provide a summary. Watch Morning Call in the morning and Q&A Good Night in the evening. Whether you trade in the Taiwan or U.S. stock market, you'll have a more complete strategy, and your trading will become more stable. Now, let's look at the interest rate decision in November. This was announced early this morning. The rate cut brought it down to 3.75 to 4%, which is the second cut this year. The key point in this rate cut decision is that there were two voting members, that cast dissenting votes. One of them is Governor Mester, who was appointed and favored by Trump. So what did Mester say? Mester? The reason he opposed it is because this time, they only cut rates by 0.25%, and he thought that was not enough. They should have cut by at least 0.5%. So Mester said she supported a 0.5% rate cut. And then there's Schmid. Schmid supported keeping the interest rate unchanged. So, you need to understand that there were two committee members who voted against this rate cut. Of course, one is a hawk and the other is more dovish. But there's a very, very important message here. This time's interest rate decision mentioned that on December 1st, they're going to start ending balance sheet reduction, ending QD. Currently, the QE amount is a reduction of $5 billion in Treasury bonds each month, plus $35 billion in MBS, that is, mortgage-backed securities. So, every month, they're continuously reducing $35 billion in MBS and $5 billion in Treasuries. Everyone needs to have a basic understanding of this. Did we talk about QE? QE stands for quantitative easing. What does quantitative easing mean? It means more money is being injected into the market, more money flowing in to support the economy and the stock market. So, quantitative easing itself is beneficial for the economy and the stock market. On the other hand, the opposite is quantitative tightening, which in English is abbreviated as QT. What does that mean? Quantitative tightening. Tightening what, exactly? Simply put, it means taking money back. The central bank is pulling money out of the market. One is putting money in, the other is taking money out. So QT itself, this kind of action, you can think of it as a tightening move in monetary policy. QE, on the other hand, is a more relaxed or loose monetary policy. Now, this time, they said that originally, they were doing QT, this tightening, every month, but starting from December 1st, how will it end? So, in other words, they're going to stop doing it. Originally, the plan was to tighten and have the central bank take cash back, but starting December 1st, they're not going to do that anymore. So what does not doing it mean? It doesn't mean they're not doing anything at all. Definitely not. That's not what it means. Not doing it here means what you originally planned to reduce. Now you're not reducing anymore. Okay, so not reducing means the funds in the market won't be taken back. So in a way, this is actually more on the loose side, more accommodative. So what's special about this interest rate decision statement this time is that a rate cut of 25 basis points matched market expectations, and on December 1st, balance sheet reduction ends. This is special and leans more dovish. Besides this key point in the rate decision, Chairman Powell's remarks are also important. He decided to. After this rate cut, is there still a chance for another in December? Let me tell you, we think the probability of another rate cut in December is low. Yes, the chance is really low. Why? Let's look at why. First of all, he said that the cooling of the labor market at this stage is the main reason for this rate cut. Powell specifically pointed out that whether there will be another rate cut in December is actually not a sure thing as the market expects. It's not set in stone. That's not the case. Why? Why did he say it's not? Because the government is shut down, a lot of data hasn't been released. For Fed officials, this means the data for policy decisions is less transparent. This lack of transparency affects their ability to the implementation and adjustment of policy and monetary policy. So in this situation, because there's a data vacuum, Fed officials don't dare to make any rash moves, so they'd rather keep interest rates unchanged. So it looks like in December, rates will probably stay the same. He also mentioned that this time, the downgrade is more of a risk management downgrade. So what does a risk management rate cut mean? Official language, whether from the Fed, Taiwan officials, or others, is always similar. When they speak, even if it's in Chinese, you often have no idea what they're saying. They use convoluted or classical language, even for simple topics. They prefer ambiguous, formal, or technical terms, making them sound sophisticated and hard to understand. It's that feeling, hard to grasp. So what does it mean? A risk management rate cut is a precautionary rate cut meant to guard against possible economic downturns or risks like an escalating trade war that could harm the economy and make loss control difficult. So, the Fed acts in advance by cutting rates as a precaution. So why are they doing another round of risk management? Another precautionary rate cut this time? It's because the data simply isn't available. He can't see the inflation data. He can't see the unemployment rate data. The government is shut down. All the official agencies are closed, so none of the data is available. With all the official data unavailable, you can only look at private sector data. But this time, Powell also mentioned that while private sector data can be used as a reference, it cannot replace the official, certified data provided by the government. In other words, even if there are private sources like ADP, the unofficial non-farm payrolls, PNI, and so on, there are a lot of these kinds of private market data, no matter what kind they are. You will take all of this data into consideration. However, since the government is currently shut down, the most impartial and authoritative institution can't provide reliable, objective data for the Fed to use when deciding whether to cut interest rates or keep them unchanged, which undermines credibility. So, they'd rather keep things as they are. So this time, at most, there might be just one more rate cut. Because they can't see the data, they have no choice but to cut rates once for now. But since they've already done 2 consecutive preemptive rate cuts, that is, they've cut rates twice, it's likely that there won't be any action in December. So why might there be no move in December? Besides the fact that they've already done 2 preemptive cuts, the second reason is what we mentioned earlier about this interest rate decision. They specifically pointed out that the balance sheet reduction will end on December 1st. As I just mentioned, ending the balance sheet reduction also, to some extent, signals a more dovish stance. Alright, this means tightening has ended. They were going to tighten, but now they've stopped, they've paused. So, the chance of a December rate cut is low. On the financial side, Powell did something interesting. Powell rarely talks about the stock market. He hardly mentions it, but this time he brought it up and said, "This time, the boom in AI has many people saying AI is a bubble. When will this bubble burst? The more it inflates, the bigger it gets. Will it end up like the dot-com bubble in 2000, where it popped, the stock market crashed, and we entered a bear market that lasted for years? Could this kind of situation happen?" He said the current AI boom is different from the dot-com bubble back in 2000. He said it's not the same, because these AI companies now, the development of AI itself, actually generates real profits. They're really making a lot of money. There are real profits. Unlike the dot-com era, when many internet bubbles were just based on dreams and hype, people would talk up their vision, claim their business would be amazing, and paint a rosy picture of the future. But in reality, there was no income or profit, so if things went wrong, they'd go bankrupt just like that. But he said that these current AI companies are actually making profits. And there's something very important. Besides having real profits from AI itself, these AI companies also have something else. They have other businesses to support them. They're not just relying on AI alone. For example, take the so-called Big 7 companies. Let's talk about Microsoft. Microsoft is developing AI and has invested in OpenAI, right? But what is their main source of income? It's not OpenAI. Their main source of income is actually what we're using right now. Windows, the Windows operating system, or the Office suite, Office 365. All of that is Microsoft. Even their cloud services are really impressive. They're among the top 3. So these companies, they're not just relying on AI. But why is there so much hype about AI now? And why is everyone worried? It's because people are afraid of repeating the dot-com bubble of 2000. But this time, Powell specifically told everyone not to worry too much. Right now, these companies actually have real business revenues supporting them. So as for the current direction, I think, as I've told everyone before, when will this AI bubble burst? Not now, because we're still in the growth phase, still in the stage of development. Once it becomes fully widespread, there might even be some companies that have invested a huge amount of capital, hundreds of billions, and then, wow, the cash flow just doesn't come back. When cash flow doesn't return or turnover breaks down, or when companies take on too much debt and can't recover money, warning signs appear. This applies to the whole AI market, all AI companies, and the entire AI supply chain. If a major AI company were to suddenly go bankrupt, that would be the biggest warning sign of all. But at this stage, from the so-called growth phase of AI to the point where AI is fully adopted by many companies, businesses, and the general public, this period of growth leading to maturity, there's still a long way to go. I think it will take at least 2 more years. There's no way around it. It may take 1 or 2 years to develop, and still takes time. Will AI develop that fast? I don't think the bubble will burst yet, but be careful. Watch. Are some companies just dreaming? If a company has no revenue, be especially careful. But the 7 giants are still solid for now. So what does he say? Unless the stock market drops, consumer spending won't fall. The stock market is still a main reason for consumer spending. Overall, I think it's still hard to cut interest rates in December. But there's no need to rush rate cuts, since the data is unclear. With the end of quantitative tightening on December 1st, this is already set to stop then. So to some extent, December is looking. At least it's still considered accommodative, right? At least it's still loose, so there's no need to be overly worried. And then, good night everyone. Okay, who is this? Good evening. And good night. Good night, Edison. Good evening as well. And hello, Melissa. Melissa and immense shape. Good evening. Good night. Good night. Okay, and who is this? Zeng Yulong. Is that Yulong? Is that a new student? Okay, may I ask why investment trusts keep selling? Will retail investors end up short squeezing them? Oh, you must be talking about the Taiwan stock market, right? Actually, investment trusts buy and sell. The prices go up and down. They buy and sell all the time. And every time, let me tell you, Investment trusts often feel pressure at quarter ends, March, June, September, and December, when closing their books. If they have profits, they may sell gradually. For instance, with the Taiwan stock index at new highs, they might sell quickly to improve reports. You might ask, will these investment trusts keep selling all the way down? Not necessarily. They might buy, sell. But for what impacts the Taiwan stock market most, the key is still foreign investors. If they buy hundreds of billions or trillions, just buying TSMC can move the index by several points. Each $1 rise means an 8-point increase in the index. The impact is significant. Instead of focusing on investment trusts, which may just buy and sell for quarterly window dressing, note that sometimes they buy a company, then sell it off at quarter's end. Foreign investors can also face this pressure, but they move much more money, so their impact is greater. It affects the index, and is even easier to move individual stocks. Retail investors can't overwhelm them by shorting. They've only recently started increasing positions, and mostly just chase highs. So, both foreign institutional investors and investment trusts are worth watching. Retail investors should still be cautious with margin financing. If margin financing rises too much, whether for individual stocks or the market overall, you should pay attention. But retail investors squeezing out investment trusts by shorting is really unlikely. When it comes to foreign investors squeezing out short positions, or retail investors who are empty-handed, or anyone else, that's a bit more likely. That's the update on the interest rate decision and Powell's comments. Now, let's look at this. Good evening, Brother Yuluman. The Kawasaki meeting was held at noon today. What happened? Everyone in the market was looking forward to it. It's been 6 years since they last met, and finally, they would sit down and talk. Would something big come from it? In this 100-minute conversation, did they make something big happen? No, they only produced a few petals. All right, so not a whole flower, just a few petals. What did they talk about? First, they agreed on rare earths. Basically, China won't impose export controls on rare earths, at least not for the US. How long will this last? Just 1 year. It's just for 1 year, and they said in the future they'll renegotiate yearly. Why renegotiate every year? Because each year, they want to check if the US has eased tariffs or trade restrictions. If you don't, I'll tighten rare earth exports. If you do, I'll loosen them again. That's how it works. Rare earth negotiations happen yearly. How much did the US lower tariffs on China? There was a reduction, and any reduction is good, but by how much? Only 10%. Honestly, a 10% cut is almost like not cutting at all. It barely changes things, just from 57% to 47%. The second type, actually, going from 57,800 to 47,800 doesn't really change the price. For example, if you buy a pineapple bun today, it used to cost $10. Add a 57% tariff, and it's $15.7. If it drops from 15.7 to 14.7, does that really make a difference? There's really no difference. It's like something going from $10 to $16 versus $15. Just a $1 difference. So overall, honestly, there's not much impact. Now, as for China, since it lowered by 10%, right? What about China? They agreed to control fentanyl flow into the United States, and most importantly, resume buying American soybeans and agricultural products. About this, in their 100-minute talk, they made little progress. A few petals, not a full flower. First, they only lowered it by 10%. For rare earths, they agreed for 1 year, with no real controls, and next year they'll keep negotiating bit by bit. Although China bought American soybeans and agricultural products, which is great, what did they get in return? Fentanyl. This is about cracking down on drugs, which is good. For both markets, for both sides, it's generally positive. Will this continue to be discussed in the future? It definitely will continue. Why do I say that? If you look at Trump's personality, and if you watch today's 100-minute talk after it was over, did you notice whether he mentioned any details? He didn't. He only said 1 year, then a 10% reduction, then buy soybeans, then crack down on fentanyl, and that's it. Did you see any details? For example, what does 1 year refer to? What kind of rare earths? Is it heavy rare earths or light rare earths within that year? He didn't say, he just said 1 year. He didn't specify how or when future negotiations would happen. The reduction from 57 to 47% is clear, a 10% cut. But he gave no details on fighting fentanyl or cooperation. He also didn't say how much American soybeans would be bought. He didn't say whether it would be 1 shipload, 2 shiploads, or 10 or 20 tons. A lot of things weren't specified. And then, in the end, if you look at it this way, given Trump's love for grandstanding, after meeting and shaking hands with Xi Jinping and talking for 100 minutes. After you finish talking, you'd probably hold a press conference, right? You'd want to show off and let the whole world know, saying that the talks with China went extremely well. Even though after the talks, he came out and said, he said that for this Trump-Xi conversation, he gave it a score of 12 out of 10. But what's the total score? Is it out of 10 or out of 100? Nobody knows. Only he knows what he means. So, he didn't hold a press conference. Neither side held a press conference, and they didn't discuss any details. So it's pretty clear that this Trump-Xi conversation was just a framework. Just a framework. Like, oh, I promise you I'll buy soybeans. I promise you on fentanyl. We'll work together to crack down on it. I promise you I'll lower the tariffs. I promise you on rare earths. I won't impose any controls. That's it. Basically, both sides are just being polite before getting down to business. As for how things will be negotiated later on, well, the various agencies and high-level officials will just gradually work it out. At least, at the very least, even though they only talked about a few petals, things are moving in a positive direction. But I just want to tell everyone, honestly speaking, today's Xi Biden meeting didn't really produce any substantial results. There weren't any concrete or complete details presented. There wasn't even a press conference for everyone, because they didn't even hold a press conference after the talks. After the talks were over, Xi Jinping stayed at APEC and continued to have discussions with leaders from other countries. What about Trump? Trump just went home. Trump went home. He said the reason he left was to spend Halloween with his family. You know, these days it's Halloween, right? Halloween is when people say, trick or treat, isn't it? He said he wanted to be with his family, so he rushed back to the US. Isn't that strange? You're at an important event, talking with Xi Jinping, and you don't hold a press conference or share details. After a 100-minute talk, you say you're leaving. Why? Because you want to be with your family? Of all times, you pick Halloween? Isn't that like a ghost story? Because Halloween is basically America's ghost story, so the ghost story just repeats itself. That's why it's so strange. So, regarding the Biden-Xi meeting, I think there are some positives, but they're not substantial. We can only say it's a framework in form, and, a superficial kind of harmony. That's the feeling to remember. There will be more talks in the future. The next round could be around November 10th. On that day, 57% drops to 47%. But do you think at 47% they'll really push it all the way down to 147%? They wouldn't dare, right? They wouldn't dare. So will this reciprocal tariff on November 10th also get postponed again? It definitely will, because Trump will talk tough. If you don't postpone it, then this Xi-Trump meeting would basically be for nothing, right? So for sure, on November 10th, it'll get postponed again. It's about giving Xi Jinping face, and showing that after 6 years, this meeting produced something, right? As long as everyone remembers that. Yulong said, just watch the rest of the live stream later. As long as you watch or rewatch the live stream, that's fine. Alright, hi Aya, 35858, good evening. Let's take another look. Besides the Xi Biden meeting, there's also a comparison group. It's very obviously a comparison group. After China finished its talks, South Korea and the US also finalized a trade agreement today. But it's clearly different. There are some concrete details. South Korea will invest $350 billion in the US, and out of that, $200 billion will be given to the US in cash, split into about 10 installments, with each installment being up to $20 billion. They made it clear, of the $350 billion, $200 billion must be given in cash. The other $150 billion is for shipbuilding, to help the US build ships, while the $200 billion is cash for the US. That's how it is. There's really no investment, right? No real investment. Just $200 billion in cash for them, $150 billion for shipbuilding, and that's it. The quota is used up. They never mention Korea investing in the US semiconductor industry or electronics. It's just giving money to the US. For the US, it maintains a 15% reciprocal tariff on Korea. One positive. The car tariff dropped from 25 to 15%, matching Japan. This benefits them. since Japan and Korea are the main car exporting countries. If Japan negotiates a 15% tariff, but Korea doesn't get the same, Korean cars would be hard to sell. It's about cost and comparative advantage. Now, with both Japan and Korea having car tariffs at 15%, there's no difference. In addition, regarding the semiconductor tax rate, he said that the semiconductor tax rate won't be worse than Taiwan's. But as for how much Taiwan is actually paying now, he didn't say. Previously, it was mentioned that as long as Taiwanese semiconductor companies or electronics manufacturers set up factories or invest in the US, they would be exempt from taxes, for example, TSMC. TSMC and its upstream and downstream suppliers are included. Previously, investing in the US meant tax exemption. Apple, by increasing and expanding its US investment, also gets its supply chain and import prices exempt from taxes. So this is exempt, that is exempt. In the end, they still haven't specified how much tax Taiwan's semiconductor industry actually pays. They only said Korea's tax rate won't be worse than Taiwan's, which, if you think about it, puts Taiwan at a disadvantage. In addition, things like increasing the defense budget and so on are also included. So you can see that the trade agreement between Korea and the US, compared to the one between China and the US, is very clear. Both sides lay out the details very explicitly. He listed a lot of things and clearly spelled out which industries would cooperate. It's all very clear and straightforward. Unlike the recent China-US trade war and trade negotiations, which are more like a framework, everyone just talks, but there aren't any real details. So when you look at this, the difference is really, really obvious. Alright, so no matter what, whether it's China and the US or even the US with other countries, I think these trade negotiations will keep happening one after another. Overall, this is actually pretty positive for the global stock markets. As long as there are talks, there's hope. It doesn't matter how much or how little they talk. Just having talks means there's hope, and that hope is generally good for the stock market. Looking at observations from 11 years ago, we're talking about rates above 4% again, since most expect there won't be a rate cut in December. The medium-term rate is around 4%, and the 10-year Treasury yield has risen above 4%. The terminal rate is 3.7%, and expected rate cuts have decreased. The expected number of rate cuts has been sharply reduced to about 0.7 times, which means that whether there will be a rate cut in December this year, the market actually thinks the chances are not very high. So that's a general overview. Alright, Edison. Wow, you wrote a lot. Will I have time to read all of it? If I don't get to it now, I'll try to answer later or tomorrow if I have time, because you just left a lot of comments and I'm worried I won't be able to answer all your questions. If I can't get to your questions today, we'll share the answers with everyone tomorrow. Okay, moving on to the US dollar index, it dipped slightly by about 0.x%, staying around the 50-day moving average. Continues to fluctuate. In addition, regarding the international situation and geopolitical risks, we can see that the United States has imposed sanctions on 2 Russian oil companies. One is Lukoil, and the other is the state-owned Rosneft. Anyway, just take note of those sanctions. They're targeting these 2 companies plus 34 subsidiaries, with sanctions going back and forth involving oil and natural gas exploration businesses. Then, they also said that this time, the Department of Defense, basically the Ministry of Defense, is going to conduct nuclear weapons tests. Ever since then, after the US-Russia Cold War ended, they said they wouldn't do more nuclear tests. But now they want to restart nuclear weapons testing. Why? Trump said it's because other countries are testing too. Who does he mean? He means Russia. Russia is working on nuclear submarines and doing tests. Even though, since they're doing it, they're conducting nuclear tests, so the US wants to resume nuclear testing too. Of course, whether or not this nuclear testing can actually go ahead isn't just up to Trump. Sometimes it also has to be approved by Congress. So overall, I think when it comes to the US sanctioning Russia's oil, well, you know how it is, sanctions are just like that. But will this really, truly hurt Russia at its core? I actually think it's not that big of a deal. Okay, Amy Lee, good night. Amy, good night. And who else is that? Caesar, good evening to you too. As for the power supply risk, right now it's still pretty much just a stalemate, just a deadlock. It doesn't have much impact on crude oil prices, nor does it help much. Today, oil still dropped by 0.74%. Anyway, looking at it now, crude oil is still leaning bearish. Now, regarding the economic data, like I just mentioned, keep an eye on the third quarter GDP figures for the Eurozone or the US tonight. If tomorrow the USPC monthly and yearly rates are released, I'll walk everyone through those as well. In principle, I will announce it, but because of the US government shutdown, technically, tomorrow the Chicago PMI is supposed to be released, and the PCE monthly and yearly rates are more important. As for the personal income and expenditure data, maybe it won't be released tomorrow either. Well, if it's not released, that's fine too anyway. It's just a temporary delay due to the shutdown. Actually, honestly, today is probably the busiest day in October. You could say that. Today is the busiest day in October. Why? Because early this morning there was the Fed's interest rate decision, then the Bank of Japan, and tonight there's the European Central Bank. So all three major central banks are making announcements. And then at noon there's an analyst meeting, plus the Shanxi meeting is happening today. On top of that, 3 of the big 7 are releasing their earnings reports today, and tomorrow Amazon and Apple will announce theirs. So I think out of the whole month of October, today is probably the busiest day. So once we get through today, there really isn't anything major coming up. Just wait until December, and even then, there won't be much going on. So if everyone gets through today calmly, your stock positions are well managed, and the stocks you've bought don't have any weird issues with their earnings reports, then you're good. For the interest rate decision, it's as expected. Today, they'll likely cut rates by 1/4 point. In December, they probably won't cut rates, so no cuts then. The Bank of Japan and European Central Bank don't impact stocks much. The Bank of Japan keeps things unchanged, and talks between Japan and the US are going well, so Japanese stocks keep hitting new highs. South Korea's talks with the US are going well, so Korean stocks keep hitting new highs. What about Taiwan? Is there a chance for Taiwan to talk with Trump? It doesn't seem so. Why? Trump already flew back for Halloween, so when Taiwan might make moves or show results, we still don't know. No matter what, at the very least, as the US stock market keeps hitting new highs, the Taiwan stock market is still moving in sync with the US market, so that's not bad. The Taiwan stock market is also continuing to reach new highs. So, looking at things right now, it seems like all the Asian stock markets are generally leaning positive. With progress in trade war negotiations, and with the leaders or governments of various countries generally taking a bullish stance, you could say China, Japan, Korea, and Taiwan are all the same. They're all following the US stock market and continuing to hit new highs. This is all, we think it's all interconnected. Of course, the key point is still what kind of stocks you're buying. What stocks you buy is definitely important, but the overall trend right now is still pretty bullish, and that hasn't changed. It's just that when it comes to position management, everyone still needs to pay a bit of attention. And as for tomorrow's earnings reports, we'll also take a look together. Apple's and Amazon's, Apple's earnings should be pretty good, mainly because of the iPhone 17. Right now, it looks like sales are pretty strong, so whether this will be a major highlight in this earnings report is something everyone can watch for. And as for Amazon, you can keep an eye on that too. AI, e-commerce, and other related news, everyone should pay a bit of attention to these. AI is going to keep developing. Now, Amazon has been laying people off recently, right? They've recently laid off either 15,000 or even 30,000 people. This is mainly because the development of AI has replaced a lot of human jobs, so they said they're laying off between 15,000 and 30,000 employees. So, of course, layoffs are beneficial for companies because they lower costs. In fact, it's also good for financial reports and revenue. It's just that the people who get laid off are the ones who have it tough. So, when it comes to Amazon, just keep an eye on whether their revenue and profits are being supported, at least to some extent, by these layoffs. If that's the case, then for Apple, we can look at topics like the iPhone 17 and so on. If everything looks good, I think I'll keep investing. Tomorrow, these two, Apple and Amazon, should provide some bullish momentum to support the stock market. Let's take a look at the financial reports section. All right, good night to all the hackers. It's been a while since we've seen the good hackers. Let's catch up. Let's catch up. I know some of you might not be up to speed and you'll watch the replay. That's totally fine, no problem at all. Just remember, whether you're watching the live stream or not, if you have any investment questions, you can ask them in the live chat or leave them on the message board. I check them all. I'll see all of them, so if there's anything I missed tonight, I'll definitely answer your questions tomorrow. And if you joined late and are watching the replay, that's totally fine too. Just remember, whether it's live or a replay, make sure to like, subscribe, and share. This is really important. Now, let's look at Microsoft from an industry and sector perspective. As for Microsoft, their third quarter revenue performance was quite impressive, reaching $77.7 billion, an 18% year-over-year increase and beating expectations. The EPS was also outstanding at $3.72, a 13% year-over-year increase and also above expectations. Their cloud business and intelligent cloud services both performed well, with annual growth rates between 28% and 40%. Really, really high. But today, in US pre-market trading, the stock dipped a little over 2%. Why is that? Because there was something that made the market a bit uneasy, but honestly, I think this concern is a bit of a stretch. This same concern has come up in other companies over the past few months, but in the end, the market proved it was just a worry and nothing actually happened. People are worried that Microsoft's massive capital expenditures might create cost pressures and so on, and that maybe they won't be able to make that money back. Why? Because in the third quarter, Microsoft's capital expenditures reached as high as $34.9 billion, which is a year-over-year increase. That's a 75% year-over-year increase, which is a record high, a new peak for innovation. So everyone's worried like, wow, in just one quarter, your capital expenditure for the third quarter alone is as high as $35 billion, and half of that $35 billion is spent on buying NVIDIA's very expensive chips. So people start to have some doubts like, wow, this quarter 3 revenue is over 77 billion, and you're spending half of that on capital expenditures. Then within that half, you're splitting it again. So which parts are being allocated where? Will buying NVIDIA chips really make back that much money? I think everyone doesn't need to worry about this, because if you look at Microsoft's revenue, they're making 70 or 80 billion every quarter. So even if you're spending over 30 billion, like 35 billion on capital expenditures, honestly, it's not a big deal. They'll probably make it back in the future. Other companies might not be able to say the same. But Microsoft doesn't need to worry, because whether it's in cloud computing, cloud services, the Microsoft Windows system, or the Office suite, just these major cash cows alone generate an insane amount of cash flow. They're making money hand over fist. Just think about it. When you turn on your computer now, out of every 10 computers nowadays, about 6.5, at least 6.5 are running Windows, right? Out of those 10 computers that are turned on, except for Apple, if you're using a Mac, maybe you won't install Office or whatever. But at the very least, all the Windows systems are using Office. You use Excel, PowerPoint, like the presentation we're using right now is also made with PowerPoint. And even things like SS and so on, I use all of them too. So when it comes to Office software, everyone really can't do without Microsoft products. That's why Microsoft's cash revenue is actually extremely stable. So with such massive capital, I think the market is actually overly worried. With this kind of excessive concern, I believe that in the future, Microsoft will still be able to make money, so there's really no need to worry. The revenue for the fourth quarter was also pretty good. The estimated revenue for quarter 4 is about $79.5 billion to $80.6 billion, which is better than market expectations. The annual growth rate of the cloud division even reached 37%. So overall, looking at Microsoft's fundamentals right now, I think no need to worry, the technical indicators look fine. Microsoft only dipped 0.1% yesterday and is still above the monthly and quarterly moving averages. Watch the US stock market pre-market today, even though Microsoft faces some pressure. So maybe if it pulls back close to the monthly moving average, and you're thinking about buying, you could look for good entry points when it pulls back to the monthly average or the 10-day moving average. After all, its fundamentals still look pretty solid to me, and technically, at most it's just going through a slight consolidation phase. It hasn't entered a bearish pattern. So overall, there's no need to worry, since both third quarter and fourth quarter revenues are still better than expected. The other stock is Meta. Today, before the market opened, it faced a lot of pressure and dropped nearly 7% to 8%. So what happened with Meta? Meta's revenue for the third quarter was $51.2 billion, and the expected annual growth of 26% is actually pretty good. But there's one issue, the so-called Beautiful Act, which is this tax reform bill. Because of this tax reform, there are some changes in the tax system, so Meta has to deal with this in the current quarter. They had to set aside a one-time income tax reserve expense as high as $16 billion. So this is a one-off charge that they had to recognize up front. Once this expense was accounted for, their original net profit was immediately slashed by $16 billion. As a result, their EPS dropped by 83% year over year, which is a huge decrease. So, compared to market expectations, they only earned $1.05 per share. Compared to last year's $6 per share, that's a huge difference, since it's an 83% year-over-year decline. But as you can imagine, because this is a one-time recognition of an income tax expense, once this one-time tax expense is recognized, it's done. So in quarter 4 probably won't be affected by this anymore. Alright, so I think the revenue fluctuations in the third quarter might be pretty significant, because the market might worry like, wow, your EPS doesn't look good anymore. But honestly, it's just because of this tax reform plan that EPS dropped by 83%. It's not because of the core business, it's not because AI development is going badly or anything like that. People are still using Facebook, Instagram, or whatever, even the VR headsets and all that. Meta is doing fine, both its main business and its side businesses are performing well, so it's really just about the $16 billion expense. That's all there is to it. So I think this is something the market is exaggerating, making it sound like, wow, an 83% drop, but in reality, it has nothing to do with the company's fundamentals. The daily active users are 3.54 billion, which is pretty good, an 8% year-over-year increase. Are there really that many people? I don't know either. Every day, 3.54 billion people use Facebook or IG or some other AI-related things. The average price of ads also went up by 10% this year, and ad revenue is strong, expected to be over 50 billion. As for their Reality Labs division, it lost $4.4 billion, a big loss mostly from things like headsets and the VR department, which is still losing money. But the scale of the loss isn't as big as the same period last year, so the losses are narrowing. Looking ahead, the estimated revenue for the fourth quarter is between $56 and $59 billion, which also meets expectations. So actually, both the third and fourth quarter revenues are in line with forecasts. The only major issue is the sharp drop in EPS in the third quarter. For the whole year, capital expenditures have been raised to $70 to $72 billion. Compared to their previous estimate of 66 to 72 billion, they've actually raised it. Now, just so everyone has a basic idea, when capital expenditures go up, it means these companies are seeing future revenue and enough orders to justify increasing their capital spending by that much. So that's something everyone should be aware of. So I think that in this earnings report, even though it might affect Meta's stock price when the US market opens today, everyone should pay attention to the fact that this is a one-time tax expense. Overall, the company still looks pretty good to me. Still quite commendable. As for the technical side, yesterday it had a slight increase of 0.03%. If today it drops by 7% or 8%, just keep an eye on this neckline. Just focus on this neckline. If after today's close, the stock still finishes above this neckline, which is basically the current 20-day moving average, if it closes above the 20-day or monthly moving average, then it's no big deal, nothing to worry about yet. But if this neckline is broken, I think there's still support below, like the 200-day moving average, so it's still okay. It still doesn't mean it's turning bearish. At most, it's just a high-level consolidation or a pullback after a big rally. Basically, it means the highs aren't making new highs, but the lows are breaking lower. So, like with Meta, it's moving in a way where the highs aren't higher, but the lows are getting lower. So at most, it's a pullback after a strong rally, forming a downward pattern, but it's not a major bearish trend. The fundamentals aren't bad either. It's that kind of situation. Although I really don't like their CEO, Zuckerberg, because I always joke that he's like a weather vane, right? He just goes whichever way the wind blows. When Biden was in power, he leaned toward Biden. Now that Trump is back in the spotlight, he immediately switches sides, saying Trump is great, Trump is awesome, Trump is so brave. Then he unblocked Trump's Facebook account. This was on July 15th last year. I remember it clearly. It was around our National Day. He reopened Trump's Facebook and said, because Trump is so brave, so amazing. At that time, the polls suddenly shot up, right? There were 1 or 2 bullets. Should be 2. 1 grazed his ear, 1 was like a hero's wound, and 1 hit his chest. He survived a great disaster. Surviving such a catastrophe means good fortune will follow. At that moment, this main blogger started hyping things up, praising Trump, saying how great he was. But before the bullet was fired, he didn't think Trump was that great, and he didn't give Trump any political donations either, didn't give him anything. Right? It was only after the bullet flew by, after the polls went up and he managed to take out Kamala Harris, that he immediately opened up Facebook. Actually, sometimes with these businessmen, well, what can you say? Businessmen have no homeland, they don't really know what to say. Anyway, all in all, his fundamentals are pretty solid. It really does seem like his fundamentals are good. Just think about it, how many of your friends around you are using IG? In China, everyone on IG is also watching Facebook short videos. There are so many. So that's it. Anyway, there's demand for it. That's the meta part. Now let's talk about Google. Google's financial report and revenue are impressive, consistently strong. Revenue and profits in the 3rd and 4th quarters, plus some cloud departments, cloud computing divisions, and YouTube as well. YouTube's ad revenue is still pretty good, and as for the revenue from their cloud division, not only did it grow 34% year over year, but they also have nearly $155 billion in backlogged orders, hitting a new record high, so I'm very bullish. Also, their monthly active users have reached 650 million on Gemini, which is that AI platform. As for capital expenditures, they've raised them again, and by quite a lot. Capital expenditures went from the original $75 to $85 billion, and now they've bumped it up into the $90 billion range, specifically to $91.1 to $93 billion. So if you look at Meta, its EPS, although it dropped to 1.05 due to a one-time tax expense, they still raised their capital expenditures. So with AI continuing to develop and Google's earnings performing so well, they're also continuing to increase their capital expenditures. Whether a company's revenue is good or not, they're all increasing their capital expenditures. So in the AI sector, honestly, I don't know when a bubble might form. Right now, it still looks really strong, seriously strong. So with both revenue and capital expenditures being raised, Google is no longer just following the 20-day or 250-day moving averages. It's probably moving up steadily along the 5-day or 10-day moving averages. Yesterday, it went up 2.65%, and in pre-market trading today, it's up about another 5%. It's still extremely, extremely strong, and it'll probably keep hitting new highs today. So if you're holding Google stock right now, I think you should just keep holding for the time being. Don't overthink it. If you don't have any, there's no need to chase it. Really, don't chase. There will always be a chance for a pullback to the 5-day or 10-day moving average, and you can look for a better entry then. If you're aggressive and want to buy, wait for a pullback to the 10-day moving average. If you're more conservative and steady, maybe wait for it to come down to the 20-day moving average. If it gets there, then look for a buying opportunity. Will there be a chance? There will definitely be a chance, absolutely. It just depends on whether you have the patience to wait for it. There will definitely be a chance at the 20-day moving average. Every stock at some point will come down to the 20-day, 50-day, or even the 200-day moving average. The question is whether you have the patience to wait for that buying opportunity when it comes. Or maybe you don't have enough funds to wait it out slowly. If you just can't wait and you really want to buy stocks every day, if not buying every day makes you feel restless, keeps you up at night, makes it hard to go to the bathroom or even eat, then remember, if you're that aggressive, just operate along the 5-day or 10-day moving average. When it comes down to the 5-day or 10-day moving average, clear out your positions, buy a little at a time. And then, every time the stock hits a new high, sell off a bit each time. That's pretty much all you can do. Honestly, those long-term buying opportunities for big swings are already gone. If you bought for the long term and missed out, all you can do now is sell gradually as you go. Keep selling bit by bit, that's basically the idea. After all, it's really strong right now. In this kind of strong market, if you're empty-handed and want to keep chasing the price, honestly, I think the risk is relatively high. But if you're someone who prefers a more stable approach, honestly, it's better to wait for a pullback and then gradually build your position. That would be a safer strategy. Just giving you this as a reference. Alright, let's talk about this. Boeing, the wild beast. Boeing's revenue was $23.2 billion, up 30% year over year, beating expectations. But EPS had a huge loss, down to $7.50 per share. Why such a big loss? Isn't Boeing already producing the 737, 777, and 787? Haven't they resumed production and deliveries? The planes are out, so revenue should be coming in, right? Then why is EPS such a big loss? Why is that? Right? Why is that? Because they said this time the loss was mainly due to delays in the development of the 777X. And on top of that, they haven't received regulatory certification yet, so they took a $4.9 billion loss for that. Also, even though their FCF, that is, free cash flow, and operating cash flow are still performing pretty well, that's actually beyond expectations. As for the current situation, the 737 MAX, although the US Federal Aviation Administration has allowed them to gradually ramp up production, slowly opening up, and even letting them conduct some inspections themselves, the production rate has now increased from 35 planes a month to 38. That's right, the cash flow has indeed improved and been helpful, but their real target is at least 42 planes. So, with 38 now, there's still a gap of 4 planes. When they actually reach 42 planes a month, Boeing's cash flow will probably look better, much better, actually. We're just saying it will look better. Okay? So, pay a bit of attention to the EPS losses. Today, before the US stock market opens, Boeing might still be under a bit of pressure. Alright, the line you need to pay attention to is this one. Yesterday, it dropped by 4.37%, this neckline here. When I talk to you about the technical side, you really need to keep an eye on this neckline. This neckline might not be able to hold today. If in the next few days there's a chance to regain footing above this neckline, then there's a better chance to ease the short-term head pressure. If this neckline keeps acting as resistance and can't be broken through, then the next support level to watch is the 200-day moving average. Alright, so that's about its earnings report. Revenue was decent, but EPS wasn't good. And as I just mentioned, their aircraft production still hasn't caught up with their targets. So in the short term, at least from a technical perspective and based on the earnings report, there will be some relative weakness. This area of weakness, especially this neckline, needs to be watched closely. If it can't hold, the price will likely move closer to the 200-day moving average, so keep an eye on it. Alright, and also, let me mention, just a few minutes left, Starbucks, yes, Starbucks. Every time I do a live stream, I just can't buy Starbucks. And Starbucks, well, today happens to be Halloween, right? I just got a text saying that for Halloween, today and tomorrow, Starbucks is having a buy one get one free promotion. So, it just so happens that it's the end of the month, so take it easy for a bit. Tomorrow is Friday, happy Friday, and it's also the end of the month. Maybe you just got paid, right? So enjoy yourself. After Friday, remember to go to Starbucks and take advantage of the buy one get one free deal. Let me share the Halloween promotion and talk about Starbucks' financial report. Their Q3 revenue was strong, matching expectations at $9.6 billion, up 5.5% year over year. However, it ended a 6-quarter growth streak. EPS was 52 cents, missing expectations, and global same-store sales increased by 1%, which isn't bad, a 1% year-over-year growth. Previous quarters declined. That's a quick update on Starbucks' financial report. We won't cover technical analysis. Honestly, instead of Starbucks financials, the buy one get one free promotion is more appealing to me. Here are companies whose stock prices rose before the US market opened. Eli Tech and Robinson International were up 12 and 14%, respectively, as their earnings beat expectations. Google stock was up 7.7% in US pre-market trading due to much better than expected earnings and a significant adjustment. On earnings, Estée Lauder rose 5% pre-market, and Albemarle up 3.89%. Chipotle, the Mexican grill, fell. This company experienced a notably sharp drop of 19% in pre-market trading. Break time equals 0.5s/. Keep an eye on this company. Previously, it had performed quite well, but their former CEO left to join Starbucks. Oh, so now, if I remember correctly, the current CEO of Starbucks is from Chipotle, that Mexican grill company that makes burritos or something like that. He went over there, so after he left, their earnings report has shown that they've downgraded their ratings 3 times in a row, just one downgrade after another. That's what the downgrade is about. Before the US stock market opened, their stock price dropped 19%. Also, eBay, these days many people don't use it anymore, fell 9% in pre-market trading. Meta also dropped 8% before the market opened. All this happened because their earnings reports missed expectations, so it's worth watching. Overall, I think for the US stock market today, we might want to see if Google can hold up the electronic trading session. If it can, then I think the US stock market as a whole doesn't really have any major concerns. Although Meta is under a bit more pressure today and is dropping, if Google can hold steady, it should balance things out between the bulls and bears. As for the Dow Jones Index, it dipped slightly by 0.16% yesterday, but stayed above the monthly and quarterly moving averages. The Philadelphia Semiconductor Index, on the other hand, remained strong and rose by 1.85%. It's very strong, hitting new highs. The Magnificent 7 Index rose 1% yesterday, also reaching new highs along the 20-day moving average. Besides today's Meta, after Google and Microsoft report earnings, tomorrow's Amazon and Apple are also extremely important. Their results will impact the Magnificent 7 and be key for the future of the US stock market. Everyone will be paying close attention. Alright, that's all for the Magnificent 7 content, bringing you the latest updates before the US market opens. I hope everyone becomes steadier on their investment journey. When class is over, remember to like, subscribe, and share. If we didn't answer your comments today, we'll address them in tomorrow's class. Finally, I wish everyone smooth trading. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.